Hello, welcome back everyone to another video where we're going to be going over Oracle's earnings this morning. It is currently 7:50 a.m. September 9th, and Oracle is supposed to report earnings after the market close on September 9th, 2024. Let's just make sure that is correct and see what the EPSs they're supposed to come into. So they're reporting after the close with a market cap of $393 billion, it looks like. And their consensus on the EPS forecast is $1.05, beating last year's EPS by 10 cents. Now, last quarter, we saw what looks like to be here at the bottom of this thinkorswim, $1.41. That was 2 quarters ago. I think our last quarter, we had somewhere around $1.14 earnings per share. Let's take a look at the charts really quick. So currently on thinkorswim here, Oracle is trading above our respected EMA lines, or our golden crossover as we like to call it on thinkorswim, which is a good sign for earnings going into this because it's at its almost all-time highs of about 146. Now, if we do see a downward trend here move, we could expect a downward trend toward 122 after earnings. This is on the day candle here for both the thinkorswim and TradingView application. So looking about on our TradingView chart here, we can see that, or what we would expect is probably a lower move down to this 141 level, and then a stall out either around this 140 or this 142 level before earnings is my expectations. Going into expectations, I am hoping that Oracle beats earnings because of their cloud contracts that they signed, and we're going to go over that in just a second here. On Oracle's website, you can find their financials, and that is what we're going to be looking at. It said in quarter 3 and quarter 4 of 2024, Oracle signed the largest sales contract in their history, driven by enormous demand for training AI language models in the Oracle Cloud, said their CEO. These record sales drove RPO up 44% to $98 billion. Throughout the fiscal year 2025, the CEO expects strong AI demand to push Oracle sales and RPO even higher and result in double-digit revenue growth this fiscal year. She also expects that each successive quarter should go faster than the previous quarter. We'll see about that as OCI capacity begins to catch up with demand. In quarter 4 alone, Oracle signed over 30 AI sales contracts totaling more than $12.5 billion. That's a pretty good number, except with their market cap, they make most of their money from their licensing and cloud support services, including one with OpenAI to train ChatGPT in the Oracle Cloud. Now, in this paragraph, it basically says that Oracle signed with Microsoft, Google, and NVIDIA for their data centers to provide enormous amount of data flow for these other companies in order to have their cloud services be more up-to-date, secure, and just a better working and faster network for everyday people to use. They do have a quarterly cash dividend of 40 cents per share, which is pretty good. And that's really good for a company showing that they're going to grow earnings, and they should. Looking at their financial results, we can see again that cloud services and licensing support was around 72% of their revenue, which is what they're doing here. They're signing sales contracts in order to build their cloud infrastructure as well as Azure. They said they've initially built 12 OCI data centers inside the Google Cloud, which they expect basically to have more data centers by the end of 2025. The estimated future annual amortization expense related to intangible assets as of May 31st, 2024 is as follows. For fiscal 25, we expect to see 2,303, and that is I expect, in the billions, if not millions of dollars. And here, it's basically saying their expense. So their revenue is going to be outpacing their expenses, which is what we like to see in a company that's producing profit. Well, folks, what we could see from Oracle not producing well of a sign as we'd like to see after earnings is probably because of economic conditions. And we can see here at our economic calendar. Excuse me. We can take a look at our economic calendar for the week that today, Monday, we don't have much going on except wholesale inventories and a couple of bill auctions at 11:30. We should see a roughly a stagnant or a green day today. Same with Tuesday, we just have bills and sentiment, as well as small business optimism index. Other conditions could be currency fluctuations. Oracle does have assets in other currencies besides USD, which is important to note. They also have increased competitions by other data centers, although Oracle, based in Austin, is one of the best and highest competing companies that you have in this sector. R&D and capital expenditures. So research and development, they spent a lot on research and development here. I think we have it somewhere here. Research and development, $2,226 million was 15%. That's coming in below their cloud services and licensing support for operating expenses. I'm not sure what their amortized expense is for fiscal 2024, but supposedly cutting their expenses in half by 2026, and then cutting it by almost 2.3%. I'm sorry, 2.3 times by 2027, which is quite good. We also have regulatory changes, but besides capital expenditures, they could just buy back shares, increase dividends, things like that. Regulatory changes, new regulations, or compliance costs that could also impact Oracle's financial performance. So let's take a look at we'll look up data center sector for stocks performance, and see how the data center stocks are doing today. Data center stocks. Center stocks. Sorry guys, Center and their share price. We have DLR, which is at 143. We have Equinix, they're pretty good too. Cyrus One, I have not heard of. CoreSite Realty, I have not heard of. QTS Realty Trust, I have not heard of. Oracle is really well positioned in the AI and data center, I guess, space and in this sector because they have such good sales contracts with these companies out there like Google, Microsoft, and Nvidia. Going into the future, I really would like to see Oracle do something surprising and keep their revenue growth intact. But like I said, let's review really quick before we get out of here. The graph is currently trending above this 142 140 line above our EMA on the Thinkorswim candle. Now, if we do see a downtrend start to come, we probably can see it touch around 122 after earnings. If Oracle does prove to be less substantial than we thought it was, but if we do beat, we could expect, and we can zoom out here to our week candle, hitting all-time highs, probably a 20 cent or a 15 not cent move but dollar move. 120 to 93, that is 27. So you could expect around a $15 to a $27 move. Thank you guys for watching, and of course, please like and subscribe if you enjoyed the video. Have a great day. Thank you.